Another thing that had Wall Street buzzing today, the 30-year mortgage rate topping 4% for the first time in a year, while at the same time mortgage applications fell more than 11%. Diana Olick is in Chicago. That's where some of the nation's biggest REITs, or real estate investment trusts, are meeting to discuss the challenges of rising rates in the commercial and residential sectors. Hi, Diana. You know, that 4% is a bit of sticker shock now that we've all gotten so used to super low rates. How do you think that rising mortgage rates will impact the housing recovery?
Well, look, it's not a good thing, especially when you have rising home prices. Prices up over 12% in April from a year ago, according to CoreLogic. You don't want to couple rising rates and rising home prices when you still have a fledgling housing recovery. Of course, we still have to remember 4% is really historically low. I mean, I bought my first apartment at over 8%, and I was thrilled at that rate. I know that dates me. But going back to this, what's going to happen in the near term is it may take some fence sitters off the fence thinking, what if rates go higher? Maybe I need to buy now. But in the long term, again, it is not healthy for the housing recovery.
My first mortgage, Diana, 12.75%. That dates me even more.
You're older. See?
I'm a lot older. We've seen a huge drop in refinancings, by the way. So what does that say about the potential effects on the broader economy? Because people do that to lower their monthly payments and free up cash.
Exactly. It takes cash out of their pockets. We had seen the refinances surge a lot over the past several years. They were making up in the high 80% of all mortgage applications. Now they're down to just 68% of mortgage applications last week. People had already refied at the 3.5% rates, so there aren't a lot of people left out there who could refi when rates go above 4%, especially those who might still be in a negative equity position. Refinances has really been juicing consumer spending, whether it be for home remodeling or for other types of purchases, cars, vacations, etc. When you take away those refis, you are taking money out of consumers' pockets.
Well, you know that this is the spring selling season. So with the rates going up, do you think people are now going to rush out to buy a home and lock in a mortgage rate before they go even higher? I mean, what's the trend that you're seeing?
I mean, it could be, as I said, it could get some fence sitters off the fence. But again, we're coming toward the end of the spring season, which was pretty lackluster when it came to sales. There is such low inventory out there right now that's pushing prices higher. This has not been the sales season that we expected to see, despite the fact that we did see very high rise in prices.
All right. Thanks a lot, Diana. Diana Olick reporting from Chicago.